Best in brand retailer, Costco. You love their deals. You love their giant packs of toilet paper. Everybody does. Who loves the stock at this price and why you shouldn't love the stock at this price in 3 minutes from River One Asset Management. So who doesn't love stock charts that go up and to the right? Fantastic returns for Costco from COVID over the last 5 years. We've had about a 3x return from 300 and change to a little over 1,000. However, this has not been earnings growth only. There's been a huge gain in the valuation of this company only on its valuation multiple. Let's take a look at what's going on behind the scenes in Costco and show you why you should really be worried about buying it up here. The multiple you pay for a company matters. It matters greatly to your returns over the long run. The S&P right now is trading at about a 22x PE, 22 times, right? And take a look at this long dated chart of Costco, right? Up and down, pretty strong PE, hangs out in the high 20s, but guess what it is right now? Almost 62 times. Let's take a look at Costco's growth and whether or not it deserves this kind of multiple or whether the market has just gone crazy in this situation. Now, paying a high multiple isn't crazy if the company is growing at a faster rate than the market, right? So Nvidia deserves a higher multiple than the market because it's growing faster than it. A lot of companies do. And a lot of companies deserve a lower multiple than the market because they're not growing as quickly, right? The earnings aren't multiplying as fast, right? But let's take a look at Costco. Revenue growth is about 7%. Current revenue growth projected and the S&P is about 7%. EPS growth, that's bottom line growth, is a little more than 10% down here, right? And that compares to EPS growth that's expected for the S&P of about 9%. So the conclusion is Costco is growing almost exactly as fast as the market. Now, it's a best-in-class retailer. Growth could speed up. They've got a lot of levers to pull by just raising price in their membership, essentially. So we could see how a 25 multiple is very justified, maybe even a little higher, maybe even up to 30, which is historically where this thing has traded. That's probably where it should be multiplied. But this 62 multiple would imply that the top line is growing at 20 or 25%. It is not, and it is not going to. There's no possible way that they can add the stores or raise price or change the things that need to change to make top line grow at 20+% at this point. It is too mature of a company. So you, the investor, if you are buying up here above $1,000 in Costco, are paying probably 2x the multiple that you should for this company, probably not going to get the growth that is implied, that is necessary to grow you out of this. And the chances that this stock is going to outperform the S&P to us seem very low at this price. Buy everywhere in Costco.